Good afternoon, everyone. And welcome to the October meeting of the Audit Committee. Our first order of business are the minutes from the June 21 meeting, I should say, very comprehensive minutes for the June 21 meeting. Has everyone had a chance to review those minutes, and are there any comments? Is there anything we need to do to those minutes before we approve them?
No comments here.
Could I have a motion to approve the minutes for the June 21 meeting? Moved. Second? Can I have a second? Al moved his finger, and I think we have a second. All in favor?
Aye.
It's like showing up in an auction. You gotta be careful.
Switch to work.
I did?
Yeah.
Oh, I did? Okay, good. Then I can do all.
Good.
I'm not opposed.
Okay. All right, our next order of business, Greg Driscoll is here, and he is going to review the 2016-17 audit plan.
Great.
Greg?
Thank you, Mr. Chairman. Good afternoon, everyone. I think we know most, if not everyone here, but just by way of introduction for the record, my name is Greg Driscoll. I'm the lead engagement partner on the DASNY engagement, and with you today, to my left here in Albany, we have Jeff Coach, the engagement senior manager. And then by way of the screen down in New York City, we have Benny Hadnot and Annette Hale from Watson Rice. We're pleased to be here, as the chairman said, to present our audit plan for the external financial statement audit for DASNY's fiscal year ended 3/31/2017. For those of you around the table here in Albany, and in the gallery, we've got a little booklet here that we'll walk through to cover the various components of the audit plan. Our apologies to those in New York. We didn't get glossies down there, but hopefully an electronic copy was circulated down there, and you have the materials, and we have plenty of extra glossies here for you on your next trip, or in the President's case, when he returns to Albany. So we'll work through this. Looking at the table of contents, we'll cover the KPMG engagement team, the folks that you'll be working with on a day-to-day basis here. We'll get through the guts of the 2017 audit plan, areas of audit focus, responsibilities and deliverables and the like. We'll talk a little bit about the information technology testing that we'll do as part of the audit. We'll cover new and emerging accounting pronouncements, one of which is GASB statement number 72 on fair value measurement, which the authority will be implementing with the 3/31/17 financial statements. We'll talk a little bit more in depth about that particular standard, and then some knowledge sharing, some KPMG sites that may be helpful to you in your various roles. So moving on to page 3, you can see our org chart for the KPMG BCA Watson Rice engagement team. The great news is once again we have a great deal of continuity on this team, as we have over the last couple of years. I've introduced the folks that are here today. Continuing to help us in a consulting partner role is Marie Zimmerman, who was out of town today and couldn't make it. But even down to the staff level, we have returnees at all levels, as well as amongst our subject matter professionals. So again, folks that are familiar with DASNY's business in working with the team here at the Dormitory Authority to accomplish the audit tasks. Benny, I'll turn it over to you. Maybe talk a little bit about the partnership that KPMG and Watson Rice have had over the years.
Yeah, thank you, Greg. Good evening to everyone. That hear me, right?
We can hear you.
They hear you. They hear you. Okay. As noted in the materials, this is the 8th year of the arrangement, which has been an overall success over the past years, and we look forward to making this year, the 8th year, an overall success as well. One of the things that we do have too is on my left I have Annette Hale, who was the manager last year, and on our staff, Lawyer is the senior associate. She would be repeating again. She's been with us about 76 or 70 years, and I think what about the staff associate? Are you going to get him on that?
Yes.
Fabian?
We'll identify Fabian.
Okay, yeah, we can identify Fabian, who worked on the engagement last year. So we have a complete staff. I think he'll use another person too. So, but as we have done in the past, and we're not going to change this year, we're going to have one team and we work side by side, collaboration on all phases of the audit. That includes audit planning, which is key, looking at control evaluation and substantive testing, and do the completion. As I noted, we have 5 BCA Watson Rice team members at all levels of experience, which include the partner, manager, senior associate, and then associate. And we have approximately 650 hours, which is approximately 31% of the total engagement dollar. That has worked well. We have worked well with KPMG in terms of in the past, and I don't see why, and I know we would be working very well together. As I say, it's been a successful organization. I always appreciate, I don't leave without thanking DASNY for putting this process together. I mean, it's succeeded, and I just hope a lot of other organizations will follow suit in what you've done. Thank you, and I'll turn it back over to Greg.
Thanks, Benny, and again, I echo Benny's comments about the working relationship that we've had with Watson Rice. You know, Benny and I for several years, even down in the New York City area, and even on other state-related Albany engagements. It's been a successful partnership all the way around. Moving into the audit plan on page 5 and 6, we're going to get into some of the required communications that we have to make to the audit committee about the audit process. Some of this will be familiar to most of you, so we'll move through it fairly quickly, starting with the objectives of our audit, which is to express an opinion about whether the financial statements that have been prepared by management with the oversight of the audit committee are presented fairly, in all material respects, in conformity with generally accepted accounting principles or GAAP. As part of conducting and gathering audit evidence related to that opinion, we obtain evidence to allow us to provide reasonable assurance about whether those financial statements taken as a whole are free from material misstatement, whether from error or fraud. We cannot give absolute assurance on the presentation of the financial statements because those financial statements contain estimates and assumptions that won't be known until future events occur. Plus, we don't test every transaction that DASNY enters into in a fiscal year. So again, we gather evidence and based on risk assessment, design procedures to allow us to reach that level of reasonable assurance about whether those financial statements are free from material misstatement. As I mentioned, the audit includes performing tests of the accounting records and other such procedures that we consider necessary based on our judgments of risk, and evaluating the appropriateness of the accounting policies used and the reasonableness of significant accounting estimates made by management in the overall financial statement presentation. From the standpoint of responsibilities, we have responsibilities listed here in the booklet for all of the parties involved. Management, highlighting a couple of the more key ones for management. Obviously, fairly presenting the financial statements in conformity with GAAP. The presentation of the financial statements are the responsibility of management, not of the auditors, which DASNY certainly embraces here. Also, management's responsible for establishing and maintaining effective internal control over financial reporting. They're responsible for making all financial records and related information available to us as we request, as well as providing unrestricted access to folks that we may wish to interview or otherwise have access to in gathering our audit evidence. At the end of the engagement, as in past years, we'll request management provide us a letter of representation about the with several different aspects of the presentation of the financial statements, as well as the effectiveness of internal control. From the audit committee perspective, the audit committee's responsibility is to oversee the financial reporting process and internal control over financial reporting, as well as oversee the establishment and maintenance by management of programs and internal controls designed to prevent and detect fraud. In combination, management and the audit committee are responsible for establishing and maintaining internal controls around fraud and setting the proper tone and creating and maintaining a culture of honesty and high ethical standards in the preparation of the financial statements. Yes, Mr. Chairman.
Refresh my memory, you do not evaluate our internal controls?
Sure. We perform tests of internal controls in the overall framework of gathering enough evidence to express an audit opinion, an opinion on the financial statements. We do not express an opinion on the effectiveness of internal controls, as you would have in a public company setting.
Right. So you don't do the Sarbanes-Oxley?
No, we do not. We do issue a report on internal control over financial reporting, and if any significant deficiencies or material weaknesses were identified, we would communicate them through that report. And that report's required under government auditing standards. But as far as a full-blown opinion, as in a Sarbanes-Oxley world, on the effectiveness of internal control, no, we do not issue such opinion. And then, kind of a great segue into our responsibilities, KPMG's responsibilities as we kicked off in the objectives. We're responsible to form and express an audit opinion about whether the financial statements are prepared in all material respects in accordance with generally accepted accounting principles. I mentioned the planning and performing the audit to obtain reasonable but not absolute assurance about whether the financial statements are free of material misstatement. We will perform tests of DASNY's internal control over financial reporting to the extent deemed necessary to gather the audit evidence we need to express our opinion. If any significant deficiencies or material weaknesses are identified, we will communicate them to the audit committee along with other required communications related to the results of the audit. And we will perform the audit in accordance with AICPA professional standards as well as government auditing standards issued by the Government Accountability Office. Two sets of audit standards, essentially government auditing standards incorporate the AICPA standards and add some additional requirements. Some of them, what I'll call from an infrastructure perspective around independence and auditor technical proficiency, as well as certain reporting requirements in the area of internal control over financial reporting and compliance with laws, regulations, contracts, and grants. That's that second report that we're required to issue related to internal control and compliance. We do have responsibility for other documents that contain the audited financial statements. In DASNY's case, typically that is the annual report. To the extent that there is such a document that incorporates the audited financial statements, we're required to read the other information with which the financial statements are presented. And if we find that there are inconsistencies between that information and the audited financial statements, we will raise them with management. If management does not make adjustments to the other information that we believe are necessary to resolve the inconsistencies, then we would bring those to the attention of the audit committee. In past years, we've had no issues with the audit, with the annual report. So that's the objectives and responsibilities. With that, I'll turn it over to Jeff to talk about the deliverables as well as the areas of audit focus.
Thanks, Greg. Page 7 goes over the deliverables for this year's audit process, which are fairly consistent with what you've seen in the past. Of course, as part of the audit around the June 21st timeframe, we'll issue our auditor's report on the basic financial statements with the accompanying required supplementary information schedules in accordance with government auditing standards. The second report would be the report Greg alluded to, which is the report on internal control over financial reporting and compliance and other matters based on an audit performed in accordance with government auditing standards, or the Yellow Book report. In addition, DASNY puts together some supplementary information schedules that we do audit as well. That is usually issued with an in relation to opinion, so we'll issue a report on that. The next item being the report on compliance with requirements of Section 2013 of Title II of the official compilation of codes, rules, and regulations of the state of New York. So that's typically DASNY's compliance with investment guidelines and rules. The other item that we'll issue is what's referred to as the SAS 114 letter, which is our required communications letter to the audit committee, outlining again our responsibilities under the professional standards, the significant management estimates and accounting policies of the authority, any significant or unusual transactions, and corrected and uncorrected audit differences, if any. We haven't in the past, but if items do arise to the point where a management letter would need to be issued, at that point in time, we would also issue a management letter. And in addition to these reports, typically in the September-October timeframe, we'll issue the individual financial statement audits, which are anticipated to be about 35 individual reports this year.
Jeff, before you go on, and following up on John Gardner's question, the second report is actually then a limited report. It says in effect, after our limited review, or after our necessary review of certain of the internal controls, and then it says whatever it says. You've discovered that either we're great at it or not, but it is limited in its scope.
Correct. So what that is essentially a report that will identify any material weaknesses and significant deficiencies in the control that we chose to test as part of developing the overall audit approach. If it was Sarbanes-Oxley, for every audit objective, we would have to test controls behind that audit objective. Here, we may take more of a heavier substantive approach over a particular area, and there may be other more routine areas where we take a controls-based approach. So to the extent that we test controls as part of the execution of the audit, if through the testing of those controls we identify material weaknesses or significant deficiencies, we would include them in that report.
And we don't apply the SOX rules because.
Not subject to them.
Because we don't have to.
Correct. Correct.
Moving on to page 8, that's where we have listed out the key areas of audit focus. There are about 7 or so areas that we focus on every year as part of our overall audit, listed from cash and investments, leases and loans receivable, bonds and notes outstanding, accounts payable, payroll and human resources. We also have areas such as the financial statement preparation and disclosure, IT control testing, and the utilization of a tax specialist. In each of these key areas, as Greg's talked about before, and as part of our audit, when we assess the risk of each area, we identify the key controls that we're going to rely on to try to reduce the risk of a material misstatement and assess those key controls. Outside of those key controls, we then perform substantive audit procedures. Some of the procedures are listed here. Some of the highlights we'll have is for the cash investments and bonds outstanding, we will perform 100% confirmation of those amounts in accordance with the request of the audit committee. For the investments, we will perform independent price testing on the majority of your investments. We now have a process in place where we try to test all the investments that are valued at fair value and are in tradable markets and out there. New for this year, we will review the implementation of GASB 72, including the enhanced note disclosures, which we'll talk a little bit about later on today. And we'll also perform our procedures over the investments for the compliance with the requirements of Section 201.3 for the investment compliance for the current year audit. In the area of your leases and loans receivable, we'll take a look at the roll forward of the leases and loans account, including the debt repayments, construction and fund disbursements, and the construction fund income and investments, and perform some test work over that, as well as look at the collectability of those loans outstanding and ensure that there's no risk there to DASNY. For bonds and notes outstanding, outside of the confirmation of your bonds, we'll also agree debt balances to the trustees' confirmations for the individual restricted debt issuances and debt amortization schedules. We perform substantive procedures over the interest on bonds and the financing income, as well as the corresponding balance sheet accounts associated with those accounts. And we perform substantive procedures over the fees, bonds, and the notes to ensure compliance with GASB 7 and 23. For the accounts payable and accrued expenses, we'll perform a search for unrecorded liabilities subsequent to the year end of DASNY, March 31st, 2017, through the end of our field work, as well as perform a test and analytical procedures over DASNY's compensation and benefits accruals at the year end. Similarly, for payroll and human resources, again, we'll perform substantive analytical procedures to ensure the reasonableness of those expenses. In the financial statement preparation, we take a look at all the interest rate swaps. Again, that goes along with the 100% confirmation of debt. We obtain third-party attorney confirmations from all parties that have been interacting with DASNY for the year to ensure the proper inclusion of all litigation matters if applicable. We obtain a confirmation from the actuary related to your OPEB obligation and involve a KPMG actuary to review those assumptions for overall reasonableness and proper valuation in the financial report. And continuing with last year with the implementation of GASB 68, we'll take a look at the year 2 process of that to ensure the accuracy of that information. The IT area, which we'll talk about a little bit later on, we'll test certain IT general controls and IT application controls over your significant accounting systems, for this year being the J.D. Edwards system and the SunGuard system. And then involvement of a tax specialist will be utilized to verify that DASNY is still a tax-exempt organization. Page 9 is just kind of our overall audit approach. The diagram here is kind of showing how it's a continual process that, this is an interaction that goes on. It's not like it moves from one step to the next. We're constantly interacting with the management, reviewing significant accounting matters, and helping and reviewing the financial reporting, as well as the various substantive procedures that we'll perform. With that, I'm going to turn it over to Annette. We'll go over our timeline on page 10.
Thank you, Jeff. So on page 10, like Jeff mentioned, is the audit timeline, which shows the phases and the key audit areas. So in reference to the risk assessment and planning phase, it begins in early January and it ends around in April. The substantive testing will begin in February and end in June with the completion of the audit, which will occur in June of 2017. And the engagement team, as well as DASNY management, will have weekly meetings throughout the audit to address any issues that may arise during the course of the audit. So now I'm going to turn the presentation back over to Jeff.
Thank you, Annette. On page 11, we go into the information risk management, or IT test work that we'll perform. That will be led by Kaushal Drew, who is a director with KPMG in the Albany office here. As mentioned, the two key systems that we will look at is the JD Edwards and the SunGuard systems. As part of their review, they will take a look at the key significant IT processes and controls as it relates to financial reporting, testing those areas, and as well as the third-party service providers that DASNY utilizes, if any. There's 4 key areas they focus on, which is the information security controls, change management controls, program development controls, and the computer operation controls. And with that, I'll turn it over to Greg to go over the accounting pronouncements.
Thanks, Jeff. So wrapping up the prepared remarks here on slide 12, we have the new and emerging accounting pronouncements. One standard to be implemented by DASNY in fiscal year 2017. That's GASB statement number 72, as I mentioned, on fair value measurement and application. We'll talk a little bit about that in a minute. And then future years, if you're looking ahead to see what might be on the horizon, the whale for most governments out there from a financial reporting perspective is the new accounting standard on accounting for OPEB by employers. That would be effective for DASNY's fiscal year ended 3/31/19, so a couple of years out yet to prepare. That will result in OPEB being accounted for similarly to pensions is now, where the unfunded OPEB liability will be brought onto the face of the balance sheet, as opposed to it being just the difference between the net OPEB liability being the difference between required contributions and actual contributions. So we'll be working with DASNY management over the next couple of years to prepare for that. The benefit of a 3/31 year end is most GASB standards trigger off a June 30 year end, so you get the advantage of a lot of folks dying in the path of implementation that you can kind of walk over and get best practices. So, but again, we'll work with Kim and her team, GASB 75, as it comes closer. It will be painful. 72, talk a little bit about that. Fair value measurement and application, and basically, for those of you who are familiar with FASB statements of either corporate clients or nonprofits, FASB has had a similar standard in place for several years. Essentially, the standard does a couple of things. One, it gives a technical definition of fair value, which is, there's been what I'll call descriptions of what fair value is in past GASB pronouncements, but never a hard and fast definition. So that the standard defines fair value and provides a lot of guidance around the conceptual determination of fair value. Things to be mindful of as you're measuring something at fair value. So it's kind of an interesting statement where the first half is conceptual, and then the back half is application to investments specifically, and then some disclosures around investments. And I think in DASNY's case, not a lot will change on the face of the financial statements. The investments now are generally measured at fair value. And I don't think the methods of measuring fair value will change a whole lot. But the disclosures will change. Where right now, investment disclosures around risks, now there will be disclosures around the measurement of fair value to let the reader know, okay, how subjective are the fair values that are being incorporated into the financial statement, so they can get a sense of how much assumption or judgment is there in the inputs that are used to determine fair value, so that they can get a sense of, okay, what's the likelihood that this fair value is going to be off, if you will, or change or be different at the end of the day. So a couple of disclosures that will have to be added. There's what they call a fair value hierarchy with 3 levels, levels 1, 2, and 3. And the 1, 2, and 3 will categorize essentially the objectivity of the inputs that go into measuring fair value. Where level 1, you have a quoted price on an exchange or an active market that is for that exact security, not a lot of subjectivity to that. Level 2, you may have a direct price for a security, but it doesn't trade an active market. There's not that level of volume. Or you're using direct quoted prices of similar assets and liabilities and using a model to represent the fair value of the particular security. So level 1 and level 2 still using observable inputs to determine the fair value of the particular instrument. Where level 3, there is some degree of unobservable input used in the model. So if you had, and not that DASNY does, but if you had a rental office building and you were determining fair value based on future cash flows, the income projections that you would use in that analysis would be an unobservable input, subject to judgment, not based on an index or a quoted price. That would make that rental property fall into level 3. So the reader knows all the level 3s are the ones that are the greatest degree of judgment, so that they can be aware of how much of the fair value, the items measured at fair value, are subject to that level 3 judgment. So that's what what will be tasked upon implementers of 72 will be to categorize their investments based on those that particular hierarchy, as well as making disclosures about the valuation techniques used, to the extent that there's modeling, to the extent that they're coming right off an exchange, to give the reader a sense of, okay, how are we getting to this fair value measurement? All about informing the reader as to the nature of the underlying process used to measure those instruments at fair value.
Greg, it's maybe an irrelevant question, but I'm curious about it. Are there differences between the FASB and GASB definitions of fair value?
Very slight. Unfortunately, the way the mechanics of the GASB standards work, they modeled it very similarly to what was FAS 157. I forget the ASU number, 9 something or other, but they modeled it very closely after 157. But if you think about the incubation period that it takes to get a GASB standard out, where they started, there may have been amendments to the ASU, and there's one in particular that I can think of that wouldn't apply to DASNY, but it relates to using net asset value per share as a practical expedient. There is the ability to use that is based on whether or not there's a readily determinable fair value for the security or the instrument. FASB has changed the definition of readily determinable fair value since the GASB standard has come out. So by and large, if I were to give you a general rule, yes, it was modeled very closely after 157, but as the standard got to the issuance stage, and as the FASB guidance has evolved, there are slight inconsistencies. But yes, the leveling and the nature of the leveling is generally spot on with 157. So that's GASB 72 in at least a high-level summary. And again, we'll work with Kim and her team on developing the disclosures and provide input when requested. So the last thing here, the last slide here just covers a couple of sites that we have that might be relevant to your respective roles, either in a management capacity or on the audit committee. We do sponsor an audit committee institute that puts out some quarterly white papers and things about topics and other circumstances that are of interest to audit committee members. The focus is more on the private sector than the public sector, but we're finding more and more that those issues are becoming the same. When you think about human resource constraints, cybersecurity, that sort of thing, the gap between the things that concern audit committees in the public sector and the private sector are beginning to narrow. So I think would be relevant for the folks here. And then lastly, the Government Institute, again, white papers on various operational issues, as well as a fairly robust webcast series on governmental accounting pronouncements and other government audit topics that may be relevant to the bunch. And typically, the GASB ones are attended here by folks from DASNY Management. So that concludes the prepared remarks. We appreciate the questions that have come up as we've gone along, but we'll stop here and see if anyone else has any other questions, either here in the room or over in New York City on the screen, that we can be helpful with. All right, seeing none, we appreciate the opportunity to present to you today and look forward to conducting the 2017 audit.
Thank you, Greg and Jeff, Benny and Annette in New York. Thank you. Now I'm going to turn it over to Kathy to talk about the state of our internal audit plan. That's right.
Great, thank you. I'm going to go through the PowerPoint document that I provided to you that's titled Internal Audit Department. If you can please turn to the first page, which is actually titled page 2. I thought I'd start by going through our initiatives and objectives as we outlined at our last meeting as part of our annual plan and give some examples of how we're accomplishing a couple of those areas. I wanted to start with number 4, which is performing a quality assurance improvement program. This program is required by IA standards and includes both internal and external assessments. In 2014, we had our first external assessment, which I think most of you probably remember. We are required to have one of these every 5 years, so our next one's due in 2019. In between this time period, we need to be performing internal reviews. And so recently I put together some policies and procedures that outline the different components of that internal review and put together an outline of when we plan on reviewing those different components. I provided you the second handout, and that outlines for you that program. I'm not going to go through it in detail, but it's there for your reference, so if you have any questions, let me know. I anticipate having the results for the 2016 areas that I identified completed to report out at our next meeting. I'm looking at number 3, we're working with IS to try to help us automate some of our manual processes to create some efficiencies. And with number 5, we've executed IT audits. 2 years ago, we created our first IT audit plan, and since then, we've completed 3 areas on that plan, which is 1 more than we projected to have completed at this time. So I think we're making some great progress in our IT auditing area. John?
Thank you. May I have a motion to go into executive session to discuss the financial history of a particular corporation and matters leading to the appointment, employment, promotion, demotion, discipline, suspension, dismissal, or removal of a particular person or corporation?
So,
Thank you. Seconded. We are in executive session. Okay. We are back in public session. Let the record reflect that no action was taken in executive session other than to return to public session. Is there any other business to come before this committee? Could I have a motion to adjourn?
second.
Motion to
And
adjourn.
seconded. All in favor?
Aye.
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 Thank you. We are adjourned.
Aye.